streaming on here. Then I gotta go to YouTube. I gotta make sure that the fucking link works. Alright, we live? We good? Alright, we're good. What's good, team? We'll give everybody another 5 minutes to join and then we will get started. Let me pull up the chat on YouTube here. Then I'll pull up the Twitch chat on the right hand side. We're good to go. Any questions about any specific pairs you guys are looking at, let me know. The pairs we're going to be going over today are the ones you see on the right hand side with the red flag next to their name, starting off with AUD-USD and finishing off with US oil. Gonna be a pretty quick session today, guys. We're mainly going to focus on the 30-minute time frame. We already know where we're at overall. Again, as always, we'll do the first pair from top to bottom, which will be AU. We'll talk about the daily time frame, where we're at, what we're looking for, what we could be expecting, and then we'll go down into the 4-hour, do the same thing on the 30-minute. But again, for all the other pairs, we're gonna go ahead and focus on just the 30-minute time frame. See if we have any continuations, anything that looks crystal clear, and then we will go on from there. What's the YouTube? It's Vice Trading Academy. I linked the stream link to you on Discord there. Again, just gonna give everybody another 4 minutes to join. 7 p.m. we will get started. Again, any questions, let me know. Any specific pairs you guys want me to go over, let me know. Any trades you guys took today that you want me to go over and explain, let me know. If not, we'll focus on the 30-minute structure and then go on from there, guys. Fuck AU, man. AU just consolidating. For real though. Fuck them. Just trapping everybody. All the traders who got in at the end of London going into NYC thinking these uptrends were gonna happen, boom, straight to stop loss. All the people who thought those downtrends were gonna continue from the end of London going into the NYC, boom, straight to stop loss. All the people who thought NYC was gonna have a continuation, boom, straight to stop loss. Fucking crazy candle. One candle at what time was this? At 12:30. Fucking 20 pip candle. Straight to stop loss. Yeah, it was good, Mikey. Welcome, welcome. EAGA, EUGU gotta let structure internally set up. There'll be a few pairs for the end of this. I'm pretty sure we'll get a trade in Thursday, Friday. I'm sure we'll get something. How is EA looking? I haven't seen it from this morning, but pretty much in the same area. Didn't really even give us a lot of volume today. Went up with that one candle that was the news, and then just kind of stayed in that area for the rest of the day. But we'll explain everything. Right, towards the end of the day, it gave us the change back down to the bottom, then gave us another change, then gave us a higher low, then gave us the break. So at least now on EA, you know, we have the valid break that happened here after the change of characters. So at least on, or actually no, we didn't. Price never gave us a closure above. I'm lying. Right, for it to be a valid break, we needed to see a candle close above here. We never got that. You know, that's if we use this candle, and that's the, you know, we'll get into this conversation. We'll get to that pair. We'll leave that for when we'll go in order. We'll talk about it because those wicks are very, very important. For the ones on the YouTube chat, I'd appreciate it if you guys could drop a like. Please drop a like. Okay, buddy, another 1 minute. At 7:02, we'll get started. One more minute, and then we'll get started. Again, we'll go just to the 30-minute time frame, so it's gonna be a very quick session. And again, if you guys don't have any questions, it'll be a quick session. But if you guys have specific questions, like for example, EA, we'll go over it since you had a question on EA, Mr. Mikey. If there's any other pairs you guys would want me to do a full breakdown on, just let me know. If not, once again, we'll just be going over the 30-minute time frame. S&P 500, we could go over it. But you know, the indexes pretty much all move the same. They'll all have the same pretty much analysis. So like when you look at US 30, S&P 500, NAS 100, even if you look at the future side, NQ, right? They all move the same. So the analysis would be the exact same. I personally don't trade S&P. I would much rather trade US 30. It's the same thing, but US 30 pays out a lot more than S&P. So if I'm trading indexes, it'll be US 30. Um, but if you want me to do S&P, we'll go over S&P. But again, it's pretty much, you know, real quick, we could even just go into the daily time frame real quick. It's pretty much the same structure, right? This is US 30, right? The only difference would be like pullbacks. They look a little different. But when you have a side-by-side view, you notice it's the exact same structure. Same candles are printing pretty much. Again, structure might look a little different because again, S&P 500 is at a 5,000 price point, so the candles are going to look a little bit more tight. Compared to US 30, you see there's a little bit more flow to it, but it's the exact same pattern, same trend, same movements. It's all the same thing with US 30 and S&P. So a lot of double bottoms on US 30. Which one's the right one to take, man? That's the question right there. Again, the market's always going to print double bottoms and double tops on every time frame. The question for the traders usually is, which one is the correct one to take? Which one is going to go to profit? Which one is going to go straight to stop loss? Which one is a fake out compared to which one is the actual movement? Alright, so let's get started, guys. So AU, again, as always, daily time frame, we know we're in an overall downtrend. Push 1, first zone of consolidation. Push 2, second zone of consolidation into push number 3 that gave us the break of structure to the low, that gave us the lower low. Now all we're looking for on AU is for price to give us a set lower high. Once we have a set lower high, once we go down into the lower time frames, we want to start seeing lower lows and lower highs. Right, 4-hour time frame, we're still trading higher high, higher low, higher high. Price gave us a tap into the higher low, and price now at these higher lows has just been moving sideways. We go down into the 30-minute time frame. We have lower low. We have the lower low change of character, lower high. We have a lower low break. Right? Price gave us a lower high. It gave us that third push to the bottom into the lower low that gave us the new lows. Right? The wick closed below the bodies of these candles. So technically it gave us that low. and then price was just stuck in the zone of consolidation, where price has been rejecting highs, rejecting lows, rejecting highs, rejecting lows, rejecting highs. Price came to the middle of the zone of consolidation, trapping traders just moving sideways for the last day and a half. Right, so to answer your question, right, let's say this is the break of structure line, right, and you have, the first candle going up, whatever, you have the second candle going up, right, and then I'll ask you the question in the chat, Mikey. If the next candle comes up and does this and goes above the break of structure line that you're looking for, would you personally, would you classify this candle as the break of structure line? Let me know in the chat. No. Okay, exactly. Aura says no in the Twitch chat, right? So just because you had the first candle break above the line doesn't mean that it's a break of structure. A lot of traders online will tell you that, yeah, if it breaks above, right, if the candle breaks above the line and it closes above, is a break. Some other traders would even go ahead and say that, oh, if even the wick, right, let's say the wick of this candle closes above, there's a lot of traders online that'll tell you that, yes, this is a break of structure because it went above. But that's not the case, right? When you're trading with the structure, and let's put it in perspective, you have lower low, lower high, lower low, lower high, lower low. The first push to the top side, right, the first movement that gives you a higher high is the change of character, right? So this is where the change of character happens here, right? The break of structure happens if price gives you a higher low and gives you a higher high. This is what the break of structure is here. Now, how does the break have to look? Once again, if the break of structure, if price comes up, right, and it's only a wick, that's not a valid break. If price comes above the line and gives you a body closure above the line, it's still not a break, right? A valid break of structure is the next candles. It doesn't have to be the next candle right after. It could be 2-3 candles right after, right? It's another green candle that closes above that initial candle when it closes above that wick, right? And you have to make sure that green candle that closes above the wick, you have to make sure it's not touching the break of structure line. So let's say the wick of this candle is touching the BOS line, it's still not a break. It's still an inducement candle. It's a testing candle. If the body of the candle is touching the break of structure line, even though it closed above, it's still considered a testing candle, right? If it's still touching, you have to wait for the next candle to print, right? And that next candle that prints has to close above the wick. Let me know if that made sense. You could always, let me see, is that where it breaks the trend? Because I would wait for another candle too. Yep, when you wait for the break, you have to wait for an actual break above. So it's not the initial candle. It's the candles after that close above the wick that gives you the valid confirmation that you have that break. Let me know if that made sense, Mikey. Aura says, I'd wait for the next to be in the same movement. Right. You would always want to wait for that next candle. Would you say one or more? Yeah, it's always going to be one or more. It's always going to be one or more. And again, it's the same the same example with the EuroCAD trade that we took last week, right? You had the change of character, right? You had lower low, lower high, lower low. You had the change of character, higher high. Then you had higher low. Then you had the higher high, right? You had the break. Again, this initial candle here, this green candle, is not the valid break. It's still touching the break of structure line, right? The candles that printed right after never closed above the wick of the candle. The candle right after closed below. The candle right after that one closed at the exact same level, right? It wasn't until we had this candle here. This green candle was the one that gave us the confirmed break. Price came up, gave us the engulfing candle, gave you the retest, straight into profit back to the top side. Right? So again, it doesn't have to be the candles right after. It could take a few candles. 9 out of 10 times, it's mostly always the candle right after that gives you the break, and then you'd be looking for a retest to then continue. But the times that it's not like that and it takes a little bit for price to actually give you the break, again, that break happened with this candle here that closed above the wick. Perfect. Right? That was the break. The retest gave you another confirmation for the entry, which was the engulfing candle, the retest to then continue. So the candle didn't break the previous candle price wise. If you're speaking about this one, no. It closed right below it. If you see the wick, if we zoom into it real quick, right, you notice how the wick is above the body of this candle here. Right, and then when we move over the line, you can see that the body of this candle closed right below it. It never closed above it. Right, it wasn't until you see that it was this candle here is not touching the break of structure line. It closed above the wick. That was the confirmed move of the break. You had a little retest to then continue. Correct. This candle is not a valid break. Once again, the valid break of structure happened when this candle here printed above. These were all still testing candles on this side. All of these candles were still just testing the highs, inducement candles. So to go back to AU, once again, we're still stuck in the zone of consolidation. We're in the middle of the zone of consolidation. We already know that the middle of the zones of consolidation is where the market makers are trapping traders, just inducing traders to get into a trade. So we're going to have to wait for price to get out of the zone of consolidation, to start trending, to then start looking to take those trades again, back down to the bottom. And again, for AU right now, I'm not even expecting price to continue the downtrend. Initially, I would like to see price give us a steeper pullback, again, to at least fill this gap that's at the top of the market. This is my second point of interest as to where we could be expecting price to give us that lower high, to then start the downtrend push into the lower lows back down to the bottom. So we'll be patient. Again, if price decides to break below these lows, then perfect, right? We'll have the confirmed lower high that's at these highs, and then we'll just catch the continuations into the lower lows after price gives us the break of the 4 hour. Because again, on the 4 hour time frame, we're still trading higher high, higher low, higher high, and price here gave us a higher low. So we want to be careful with AU anyway at this point in the area that we're trading in. I'll leave this drawn out here for us, just in case. Again, I'm only going to go over the 30-minute time frame for today, but if you guys have any questions, please feel free to just let me know. I don't mind going to any other pair, or I don't mind stopping to answer any questions. But this week we had pretty good sessions, so, and for the most part, a lot of these pairs, as you can see, AU and AUD CAD, we're trading in the same areas. We're just stuck in a zone of consolidation, right? So there's nothing different that I'm gonna say about ACAD and AU that we didn't say yesterday, for example, or that we didn't talk about on Monday's session, or even on Sunday's session. Can you show me a fair value gap? I can, because I don't trade fair value gaps, so I wouldn't be able to map one out on the chart. I don't trade fair value gaps. I never studied it in depth. That's just one strategy I don't know about, so I can't really show you a fair value gap. So AUD CAD, 30-minute structure. We know we had higher high, higher low, higher high, lower low, change of character, right? Price never broke these lows, it never broke these highs until price came up over here, gave us a higher high, change of character, Same thing, price never broke these highs. Price came back down and gave us a change of character down to the bottom, lower low. Came up and again, rejected the highs, reject the lows, reject the highs, reject the lows. Now again, just because this red candle went below the break line, is it a valid break? No. We're still just testing these lows. Price is still inducing these lows. So we still don't have a valid confirmation that price is going to continue these downtrend pushes. Again, we're in an area where the market makers have been rejecting lows, rejecting highs, rejecting lows, rejecting highs, rejecting lows, rejecting highs. Price is back at these lows. Right? So as a trader, you just got to use common sense sometimes. Meaning, why would you take a trade? And listen to this question very carefully. Why would you take a trade in an area where price previously has already shown you multiple rejections? Right? Why would I take a sell position in an area where the market makers have already shown you previously in the past multiple times that it has rejected the lows and turned around and went right back to the top side? And it wasn't even slow movements. Right? Notice how every time price gives you the rejection, it shoots straight up. Every single time. Straight to stop loss. Every single time. Straight to stop loss. Right? Same thing with the highs. Rejects the highs, straight down. Rejects the highs, straight down. Rejects the highs, straight candles down. So again, what am I looking for on AUD CAD before I start taking these trades? Is a valid break of structure of the bottom. Once I get the valid break, which you guys see we had drawn this out yesterday, right? Once we get the valid break and a retest, that's when I'll start looking to take these trades to go back down to the bottom. Right now, price is moving sideways. I have nothing to trade on AUD CAD. Again, very similarly to AUD USD. In order for me to start taking these trades, I need to see price break these lows. If price doesn't break these lows, I have no trades to take. I see that trend. Perfect. For Euro AUD, we know that for this week, we still have that third week push to the top side. At this point, it's already the Thursday session. Am I expecting price to give us that third week push to the top side? Is not something that I'm expecting. Now, could it happen? Yeah, price could give us a move Thursday and Friday back to the top side. Absolutely. We have a day of rise for today. Price went into the 800 EMA. Again, the trend on the 30-minute, we're still trading higher high, higher low, higher high. Now, again, you guys will see a lot of traders saying that this is higher high, higher low, higher high, higher low, higher high, higher low, back into the higher high to then say that this is lower low, lower high, lower low, lower high, lower low, lower high, lower low. That is incorrect. Right? Why? In order for you to have a continuation, in order for you to have a trend, what do you guys always see? When you draw up your charts, when you draw up your trend with a path tool, you always see higher high, higher low, higher high, higher low, higher high, higher low. Right? But when you look at somebody's charts, they'll have it marked up like this. Something similar to this. They'll have something like this. Right? Now, why doesn't this make sense? Comparing what I have drawn here in comparison to the path tool here, what difference do you guys see in the trend? I'll let you guys answer that question in your head because I know that the answer is going to be long. So you don't have to answer that question in the chat. But I'll give you guys the answer now. I'll give you guys 20 seconds, 10 seconds to form the answer in your head. Right? What's the difference between this in comparison to this? Right? And the answer is you always get a new high broken. Before you make a higher low, you need a break. Break, boom, higher low. Boom, break, then you have the higher low. When you're looking at it here, you have higher high, higher low. Did price ever break these highs here? No. So we cannot say that this is higher high, higher low, because price never gave you a higher high. This was all part of the same trend. Now, where did price give you the higher high? Technically, price gave you the higher high here, because it closed above. However, at this point, again, you had lower low, lower high, lower low, boom, change of character, higher high. What did we just talk about on the break of structures? Right? In order for it to be a valid break of structure, in order for us to know that this is going to be a valid shift in the trend to continue, you want to see a valid break. Did we ever get a valid break of these highs? No. First green candle closed above. Perfect. Where did we get that second green candle confirmation that closed above the wick? It never happened here. It happened over here. This is where price gave us the push, a little small retest, nothing crazy. Right on the lower time frame is where this entry was really given, just a small retracement, 23.6, to then continue back up into the higher highs. Right? Let's mark this up here so you guys can see it. Right? So we know that we are still trading between this higher low here on the 30-minute time frame and these higher highs. Price came down, gave us a higher low, respected the 800 EMA. So now on the 30-minute time frame, right, 30-minute going into the lower time frames, once we go down into the 5-minute, the 1-minute time frame, what do we want to see? We want to start seeing price give us a change of character and a break of structure back to the top side. We had lower low, lower high, lower low, change of character, higher high, higher low. Price did not give us a valid break of these highs. Instead, it gave us an inducement, and then price came down and gave us a change of character, lower low. Gave us another inducement of the lows, right? Was trapping traders the entire time. All the traders who thought that this is where price was going to give us higher high, higher low, higher high, higher low to continue back into the higher high, straight to stop loss. All the traders who thought that, oh look, lower time frame, we have a shoulder head shoulder. Right? How many traders do you know trade shoulder head shoulders? So many. Right? All the traders who thought that this was a lower time frame shoulder head shoulder, it broke below, we're going to continue those downtrend pushes, straight to stop loss. Price gave us a change of character to the top side again, higher high, higher low, and it gave us a higher high. Now, what I was saying earlier on the stream, what I don't like about this right now is how big the wick for this candle is. Usually, when price gives us such crazy movement like this, where we have a crazy wick, usually I'm not keeping an eye on it. Why? This is really an imbalance in the market. If we turn off our candlesticks and we go to the line tool or the line chart, that wick is non-existent. Right? So if you're trading a line chart and you're not looking at the candlesticks, you may think that this is a valid break because price went above, gave you a higher low. So this is a moment for me where this pair specifically, this trade specifically, I'm okay with missing this entry here. Right. Why am I okay with missing it? Because again, we are looking for price this week to go up to these highs. Mathematically speaking, from this point where price is at now to these highs is still 220 pips. So I'm okay with missing the first initial entry, right, which is going to be 35 pips. I still have 190 pips left to catch, right? 190? Yeah, 180 pips. So I'm okay with missing this trade here that didn't give me a valid confirmation. Cool. Once I get that valid confirmation and price gives us that break above here, this is now when I'll start looking to take the trade. I'll start looking for my entries to then continue the pushes back to the top side. Interesting, good info. Yeah, make sure you guys write that down. So that's what I'll be looking for on EA. If it wasn't for that wick, if it wasn't for that candle printing how it did, best believe I would already be in this trade. 100%. 1,000% we would already be in this trade. However, since we don't have that confirmation, it's still just a wick, right? It's a crazy wick candle. I'm not even going to play with this. I'm not going to put myself in a situation to be like, oh yeah, this is how it looks on the chart, on the candlestick chart, but on the line chart, it looks like it broke. So fuck it, we're going to go ahead and take the trade. Nah, I don't trade that way. If I don't have my solid confirmations, if I don't have a real break of structure, I'm just not going to take it. There's no point in putting my account at risk. There's no point in even losing a trade when we already know the rules that we got to look for. We have to look for a valid break. Without a valid break, we have no trades. And how many times did we see that today? Right? We saw it on EA today. If we would have taken the trade right after the first initial change of character, if we would have said, fuck it, you know, we had, I think what, we had a 30-minute engulfing candle or something here. If we would have taken that trade thinking that this is where price is going to continue, we would have went straight to stop loss. Right? Another example is GJ, and we'll go to GJ real quick. Right? If you would have taken a trade on GJ, all we have on GJ is a change of character to the top side. So all the traders who took a trade here thinking that, oh, look, we have a higher high, price printed a double bottom, I'm getting in, we're going to the moon, straight to fucking stop loss. Right? Straight to stop loss. You always have to wait for a valid break of structure. For me personally, without a valid break, the trend has not shifted. A change of character is just an inducement in the market. That is what the definition is. So why would you put yourself in a situation to get into the inducement of the trade? Right? So we're going to have to be very careful with trades like this. Very careful. So for EA, we'll be waiting for that valid break. Once we get that break, then I'll start trading. Without that break, I'm not going to enter no trades. We'll be patient. We'll wait for price to do what it has to do, and then we'll get in. So what do you think of gaps in the market before the market doesn't mean much? Yes, gaps in the market do mean something. EU 4-hour engulfing could be an anchor for the midweek reversal. Could potentially give us 2 pushes to the highs in the end of the week. Only thing I don't like is where trading beneath the 30-minute 800. We'll go over it. Gaps in the market, very important question. Good question. Gaps in the market definitely mean something. Right? So, for one, gaps in the market reset the trend. So for us here, since we trade 372s, and 372s is an entry rule for us on the 30-minute time frame, on the 4-hour time frame, on the daily time frame. Meaning 372 on the 30, just to give you just a little example, right? A 372 on the 30-minute time frame is 3 days, 72 hours. Meaning price is going to give you 3 days of a continuation. On the chart, and now everybody that's watching, you have homework for this week. If you're serious about trading, you'll do the homework. On the 30-minute time frame, mark up your days of rise and your days of drop. And the way you turn on your session breaks, just right click on the chart, go to your settings, go to events, turn on the session breaks. On the 30-minute time frame, this is the market open, this is the market close. The market opened up here, it closed down here, this is a day of drop. After 3 days of drop, the market is always going to either move sideways or go up. After 3 days of rise, right here on EURUSD, the last 6 days, you can see it. 1 day of rise, 2 days of rise, 3 days of rise. After 3 days, the market's always going to move sideways or it's going to go down. Now, why is the gaps important? Gaps in the market reset the trend. So for example, you had 3 days of rise. Cool. Third day gave you a rise. Next day, price went down. Perfect. You have 1 day of drop. On the second day with EURUSD, right? Let's take a step back. Right? Your question now should be, well, if you had 3 days of drop, then why did market go down today? If after 3 days the market's gonna move sideways or go up? This is where the gaps come in handy. Gaps in the market reset the trend. So you had 1 day of drop, which was on Friday. Market opened Sunday going into Monday. Price gave you a gap in the market as soon as the market's open. It gave you a small gap. It reset the trend. So technically speaking, this is right? Monday is the first day of drop. Tuesday, we had a gap in the market. It reset the trend. But let's just speak about the first day, right? 2 days of drop. On the third day, which was today, price came down and gave you a third day push back down to the bottom, right? But we could see that we had a gap in the market here, a small gap. We had a gap here as well. So the trend has been resetting. Similar to gold. If you go look at gold, we had 9 weeks that price has been pushing to the top side. Go look for the gaps on gold. Gaps in the market reset the trend. Yep. So not only do gaps reset the trend, gaps are also left behind on the charts. So you could have a point of interest as to where price is going to come back to. So for example, on EURUSD, if price would have left a gap somewhere here on the chart, you know that eventually, again, it doesn't have to happen the next day. It doesn't have to happen the next week, the next month. It could take a year, 2 years for a gap to be filled. But that's good information to keep on your charts. So you already know when price gets close to that area, you know that it's going to be filled. Very similar to what we're looking for on AUD-USD. Right? AUD-USD had a gap at the top of the market. You can see that I have this marked. And this has been marked on my charts since last year, October 2024. This gap was printed October 10th of 2024. So this gap in the market is just giving me a small indicator to let me know that if price continues the uptrend in this area, instead of giving us that break that we're looking for, we know that price is going to give us the higher low in this area to then continue the higher high to at least fill this gap at the top of the market. I hope that makes sense. Let me know if you need me to explain that again. But great question about the gaps, right? Again, gaps in the market are very, very important. Very important. So where EURUSD will be patient, we know that EURUSD previously were in peak high territory already. We're still on an uptrend on the daily. We're still higher high, higher low, higher high on the 4-hour. We're sitting at the higher low, but price internally is still making lower lows and lower highs. So we'll wait for price to turn around for EURUSD. Once we start seeing higher highs and higher lows, then we'll start looking to take those trades again. EURUSD, we had 3 days of drop. After 3 days of drop, the market must move sideways or go up, and we ended up going up. Right? We also know that on EU, price gave us a lower low change of character, lower high gave us a lower low, then came up and gave us a higher high change of character. Now again, for EU specifically too, I was saying yesterday that I only had this marked here as higher high, higher low, higher high on the 30, just so we could have a more aggressive approach when we want to enter the trade in these areas. If price would have given us, if price would have gave us the inducement of the lows and then continue to make higher highs and higher lows, but price just melted below these lows. So the question is, am I going to keep the charts marked up this way, or am I going to change it? I'm going to keep it this way. And at this point, right, EU is going to give us an early confirmation regardless. Why? Because price already gave us, if we were to mark up our charts aggressively, again, like we have it here, we would have to say that this is where price gave us the change of character back to the top side. And regardless, for us to start looking for trades again, going back to the top side, we want to see price give us a break of these highs over here. So we know that we're trading between these 30-minute highs over here . My bad, I just got a message on Twitter. Give me 1 second. We know we're trading between these 30-minute highs for right now and these 30-minute lows. So for EU, we'll be waiting for a valid break above these highs. We'll be patient with EU. EU is definitely one that's going to be on my watch list. EU, you also said there was a 4 hour, so let's go back into this as well. So overall in EU, we know we're in an overall uptrend. We had push 1, first zone consolidation, the break of the first zone consolidation, higher high, higher low, and then the continuation of level 2 back to the top side. Taking EU at face value, I am still expecting price to give us a steeper pullback. So already initially, I'm already on the mindset that these pushes to the top side are still very low probability. Very low probability. Now on the 4 hour time frame, what do we have? We have a valid engulfing candle. 2 red candles, the third candle's the green engulfing candle that broke above the first red candle's body wick, and we already have the retest of the area. Now, just because we have an engulfing candle, does this mean I'm going to take the trade right away? No. Why? Because again, the market is always going to print double bottoms. The market is always going to print double tops. The same way the market's always going to print fair value gaps. And the market is always going to print flag post patterns. And the market's always going to print engulfing candles. Which ones are the most high probable entries? Again, the question that a lot of traders always have is, which entry do I take? A lot of traders chalk it up and decide to take every entry that the market is going to give them. Every double bottom, they're entering every double bottom. Every double top, they're entering every double top. Every fair value gap that prints on the market, they're going to take it. And that's the reason you see 99% of traders have a 40%, 50% win rate. They just have really good risk management. The reason why I'm not turned on by this engulfing candle is, again, we are still making lower lows and lower highs. On top of the fact that we're still making lower lows and lower highs, price never gave us the break of structure after the change of character. So we still don't have the confirmation that the trend has shifted from a downtrend to an uptrend. Now, if price gives us a valid break of structure of these highs, that's when I'll start looking to take the trade. Right? The 4 hour time frame gave us an engulfing candle. The 30-minute, this is not valid. It doesn't have a bottom wick, but it could have been a good one for a good example. Right? So I hope that makes sense. Let me know if that made sense, guys. Break of character, meaning the lower low went back up to a higher high. Yeah, so the first initial, when price goes lower low, lower high, lower low, the first initial push that gives you the higher high is the change of character. Right? So lower low, lower high, lower low. The first initial push that made the higher high is a change of character. Right? After it gives you a higher high, higher low, if it gives you another push to the top side and gives you another higher high, that's the break of structure. And then vice versa. If price is making higher high, higher low, higher high, higher low, higher high, and then it gives you a lower low, that first lower low is a change of character. If it gives you a lower high and then gives you another lower low, the second lower low is that break of structure. Kendall says, still on soft, gummy worm. Alright. Right, so we'll be patient with EU as well. GA, just moving sideways today. Right, this was another pair that early on it gave you an engulfing candle. If you would have taken this trade, straight to stop loss. Straight to stop loss. And again, I'm glad that the market printed a lot of engulfing candles today, so you guys could see it. It's not that the market doesn't give me what I want to see. No. The market, again, every single day, the market is going to give you a signal. Double bottom here. Right? Double bottom here. Double bottom here. Right? Double bottom here. Double top here. Double top here. Double bottom here. So you see the market is, or another double top here. Right? Double bottoms, you won 1 trade. You won 2 trades. Right? You won 3 trades in a row. You took 3 W's in a row. The market gave you a double top. Let's say you took this trade at the tops. Boom. You thought that this was an exhaustion candle. Boom, you took your first loss because you took a sell position. Cool, no problem. Right after that, price gave you a double bottom. You took this trade here thinking that this is where price was going to give you the higher low. Boom, straight to stop loss. So you took 3 wins in a row to lose 2 in a row. Then the market faked you out and it gave you a double top. Boom. Let's say you took the trade here. Okay, cool, you won the trade. You won 1 in a row. You're in a streak again. 1. Another double top. Okay, cool. You won 2 more trades in a row. Perfect. Right, and then another double bottom. You start looking, again, this is a 60% win rate. 65% win rate. It's not bad. But if you go back and you do your back test, and you see, and you do exactly what I just did on the chart now, start marking up every entry strategy that you have, that you use, and you start figuring out, well, okay, what was the difference between these double bottoms here that won compared to this double bottom here that you lost? What was the difference? Right? What's the difference between this double top here that I lost compared to this double top here that I won? And it's very simple. When you were trading these double bottoms here, what were you trading? Higher high, higher low, boom, double bottom. Higher high, higher low, boom, double bottom. Higher high, higher low, boom, double bottom. Why'd you take this information and you lost? Because you're taking a short position when price is still making higher highs and higher lows. You got the break, you got the retest, boom, higher low. You took a short position when price is still making higher highs and higher lows. Another double bottom. Why'd you take this trade here? When you're looking internally at the trend, what's happening? Lower low, lower high, lower low, lower high, lower low. Did price ever break these highs? No. It gave you lower high, back down to the lower low. So you already understand, okay, this double bottom didn't work because we're trading lower low and lower high. This double top didn't work because you're trading higher highs and higher lows. It's that simple. Like, it really is that simple. Trading is not that difficult. But again, it all boils down to how much back testing you're putting into the chart. And what intentions do you have behind your markups? When you go and you back test, what intentions do you have for back testing? If you're just trying to back test just to say that you back tested, it's going to show in your live charts. The markets are always going to humble you. Now, once you start losing trades and you start asking yourself, well, fuck, I thought I was following my rules. Go back and back test. Ask yourself the question, what was the difference between today's trade that I took, that I lost, compared to last week's trades that I won? And once you could answer that question, your win rate is going to go from 40%, 50% up to 80%, 90%. Because now you have an understanding as to why you lost the trade. If you're trading and you lose a trade and you chalk it up and just say, fuck it, I lost because it's part of the game, you're gambling. You go to a casino and you play blackjack and you lose a hand. You can't do anything about it because you're gambling. There is no strategy to this. And again, we don't even have to go into that conversation unless you're counting cards or whatever the case is. Blah, blah, blah. That's all Chinese to me. At the face value as to the people who go to casinos every single day for fun, in hopes to win, a person who plays the lottery in hopes to win, there is no strategy to the lottery. You're guessing. You're just throwing random numbers out of thin air. It's the same way in trading. If you do not develop a system that you know works based off of your own back testing, that is why back testing and journaling is very important. Because in trading, there's always a reason as to why you lost the trade. The same way that there's a reason as to why you won the trade, right? Because as soon as you win the trade, you're like, oh, see, my strategy, it worked. Here's my strategy, and this is why I won the trade. You see that everywhere on Twitter. You see it everywhere on Instagram. Every time somebody wins a trade, here's how I made 300,000 and here's what you got to do the same thing that I did. Right? But why is it that anytime these guys take a trade and they lose, why don't they keep the same energy? Guys, this is how I lost 50,000. Here's how to avoid it the next time. But instead, they say, guys, I lost 50,000 today as part of the game. GG's. You know, set and forget. Hashtag set and forget. We'll come back the next day. Fucking idiots. Right? Because they don't understand why they lost. They don't. They don't understand that there's a reason as to why they lost. They think that trading is just a probabilities game. I'm in a casino all day. That's what I'm a professional gambler. That's what people are saying when they trade. Right? So that's the reality. There's always a reason as to why you're losing a trade. The moment you understand the reason why you lost is the moment your trading is going to change forever. They never show the losses. That's another thing. A lot of these clowns don't show losses. But we don't even got to speak about those people, because usually the people who don't even show losses are people who don't even trade for real. They're just scammers. They're selling courses and they're selling affiliate codes, and they're affiliated by 5 different prof firms and they make money elsewhere that's not trading. So we don't even have to speak about people like that. But speaking about people who actually do trade, again, Roger Banks, Q Banks, Drew, the guy that trades GJ, who was part of that circle, Anthony's World, Lambo Raul. There's a whole bunch of traders who are actual traders. But they still don't do courses as to why they took a trade and why it lost. 99% of the people that I just said out loud say what I just said right now, right? FX Alex G is another one, right? TJR is another one. How many of them have you seen post, oh, I lost a trade today, it's okay, it's part of the game? How many of them? Almost all of them. And again, that doesn't make them a bad trader. Don't get me wrong. I have the utmost respect for the people that I just called out just now. Right? I don't know TJR like that, so I'm not gonna put him in that list. But everybody else, I've seen them trade from when I started trading in 2016, 2017, when I got introduced to it. So I know that those people know how to trade. Even though there's somebody on that list that used to scam hard, but I'm not gonna throw them under the bus like that. Right? But that's the reality. Again, 99% of traders do not understand why they lost a trade. They'll just continue to follow the system because, again, double bottoms and double tops is a system that works. But if you have $100 account size and you take 3-4 trades losses in a row, your account is blown. That's it. There's nothing more you could do. But if you have 100K, 200K, $1 million account, you're good. You could lose 4 trades in a row. You could lose 50K and not let it hurt you. Because you understand that the next trade that you catch isn't going to give you $20. The next trade you catch, you have $1 million account, you're making 100K, 200K, 300K. How many traders you see do that? Or how many times TJR, right? I know he shows his losses, so I was gonna say what I was gonna say now, right? How many times you see TJR have a week where he's down 200K, 40K, whatever the case is, but then his winners are 700, 500, right? A person with $100 account can't do that. And this is the reason, and I will say this, all these people sell courses, right? The person selling the course is always flexing Lambos and flexing all this other expensive shit. How many other students have you seen flexing Lambos? Just go to the page. Go to their followers list and go look at everybody that follows them. How many of their students are actually traders? So what does that tell you? It doesn't take a rocket scientist to understand what I'm about to say. Right? So it's very difficult. And again, I'm not saying that these guys have a horrible course. I'm not saying that what they do is bullshit. No. They have a lot of good information. A lot of what Q Bank does, we do the same thing. Again, you guys seen my fib. What's the name of my fib? How do I even check that right here? Right? What's the name of my fib? This is Q Banks' fib. Right? I learned fib retracements from Q. Candlestick analysis, I learned from Q. That's it. Out of everything in his course, the only two things that I took from there that was actually good information was candlestick analysis and the way he uses his fibs. That's it. That's it. So, a lot of the information that they have on their charts is not always the best information. We'll keep going. It's so pathetic now. Yeah, but again, it's really always been this way. It's just, you know, now is more commercialized. Now it's a lot more eyes onto it. GCAD, no continuations. We had a change of character to the top side, but we're at the highs of the daily, the 4-hour, and the 30 minutes. So I am still expecting price to continue this downtrend push on GCAD. For GJ, like we were explaining earlier with GJ, all we had was a change of character to the top side. Again, another example where, oh, we have a candle closure above, a double bottom. We're going to continue the uptrend push to the top side. Nope, incorrect. Price never gave you a valid break after the change of character. At this point, price has a 50% chance of retracing, and price has a 50% of continuing this trend. Again, very similar to the reason why I did not take this entry here on EuroCAD, and I waited for this entry over here. Because price, once it gives you a change of character, if it doesn't give you a valid break, you have a 50% chance of price reversing and hitting your stop loss, and you have a 50% chance that price is going to continue the trend to the top side. So yeah, this trade here, double bottom before the valid break, it worked out this time. Right? If you took this trade October 14 and it won, and you came back and you tried taking the same trade on October 22nd, right? Today was the 22nd. You tried taking this trade again today on the 22nd. 8 days after, you thought this was going to be the same setup that you just took last week on EuroCAD, you're fucked. Straight to stop loss. You put yourself in a situation to take a 50% chance. So again, you ask yourself the question, why did my EuroCAD trade work compared to why my GJ trade did not work? Your GJ trade did not work because price never gave you a valid break of structure. So now your psychology in trading is going to be like, okay, cool. It's not that I don't know how to trade and it's a 50% chance. No. Now I understand for the next time that I have to wait for a valid break of structure before I take the trade. If I take the trade before the break, I understand that I'm on a 50% chance of winning and a 50% chance of losing, and you have to babysit the trade. That's it. That's all you could do. So again, I hope that makes sense. Let me know in the chat if it didn't. If you need me to explain it some other way, let me know. But I'm giving you guys a whole bunch of gems today for free, bruh. A whole bunch of gems today for free. And think about it. We're only going over the 30-minute time frame and we're already 58 minutes into the stream. I said this shit was going to take 30 minutes at max. Imagine if we would have gone over the daily and the 4-hour time frame on every single pair. We would still be on the fucking second pair. Do you think most BOS get stomped out when try to enter too early? What do you mean? Let's stop calling 50-50 an aggressive trade. Nah, because when you take a 50% chance trade, it is aggressive. Technically speaking. Right, it is an aggressive trade. Because it's not a passive trade. A passive trade is knowing that you wait for the setup, you're patient, you wait for the break, you wait for the entry, and then you go. Right, an aggressive trade is getting in before you have your movements. Right, being aggressive on the charts means that you're anticipating a move, and instead of waiting for that move to develop and give you the entry confirmation, you get into the trade before your entry confirmation was given. Right, assuming that price is going to continue the trend that you want price to go to. So we have to call it an aggressive trade because that's really what it is. When they try to enter after a BOS and didn't wait for a confirmation candle, Yeah, yeah, absolutely. Again, we just seen it now for the other charts, right? If you get in too early and you don't wait for the valid breaks, there's a high chance that price is gonna reverse on you, right? And sometimes price may just reverse, right? Because the market has something called hunting for stop losses, right? Most of the time, after a change of character, before price gives you a valid break, price is just hunting for those stop losses. Very similar, again, to GJ with the GJ trade that we took during London session, right? If you go down to the 5 minute time frame and we go back to where we took the trade, right? You had lower low, lower high, lower low to these bottoms. Then you had the change of character higher high. Price went to these highs. Let me clean this out here. Let me actually do this with the trend line tool. Give me 1 second. Right, you had these lows here that we could see that price never broke these lows. It just tapped into it. Right, it closed in the exact same place. Then you had the change of character higher high that gave you this high here. Right? If you were to enter early on GJ, let's say you were looking at this and you saw price did higher high, right, low, boom, you saw that a wick closed above and you got in before the valid break, right? Which again, we know that the valid break happened here. Let's say you got in early and you said, fuck it, I'm getting into the trade somewhere here in this area. What happened? Stop hunt. Your stop losses got hunt. 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 Stop hunt. Right? You were part of the inducement. This is what an inducement looks like on the charts. Now, if you would have waited for a valid break, which again happened here, and you waited for price to give you the retest, straight to take profit. Minimal drawdown. You were in drawdown for a couple minutes, 5, 10, 15, and then it came back down for 5, 10 minutes. So in total, you were in drawdown for 25 minutes. Took the trade at 3:45 a.m. and by 5:05, so an hour and 15 minutes, price went straight into TP. So yes, the reason why a lot of people get hit out of their trade early, even if they were trading with the direction, is because they're not looking for those valid breaks. If you would have waited for that valid break, you got the entry. You got in too early. You anticipated the move too early. You didn't get the confirmations just yet. For GU, price gave us 3 days of drop. After 3 days of drop, the market must move sideways or go up. So in comparison again with EU, we look very good. The only difference between EU and GU right now is the 30-minute structure. For GU, we are still trading between the change of character higher high, and again, all of this was part of the same structure, and this low down here. So technically, we are still trading in a higher low, but when we look at the internal structure, when we look at the lower time frames, we could still see price making lower low, lower high, lower low, lower high, back down into these lower lows and this lower high over here. So we want to start seeing GU start trending back to the top side in order for us to have a valid confirmation that price wants to continue that push to the top side. NZD USD, did it give us a valid break of these highs? This is counter trend. Yes it did. Technically we have testing. This one closed above but it's testing. Then this one closed above here but it does have a bottom wick, a very small bottom wick, right? And this is a pair that moving to the top side is counter trends, so I will not be looking to take trades on NZD USD going long. we're trading between this higher low and this higher high over here. So we'll be patient with NZD USD. We'll come back to that. US 30, man, I'm a little upset. I was waiting for a type 3 pattern. Right, we had 3 days of rise. After 3 days of rise, the market must move sideways or go down. Beautiful fucking movement today. Right? This was definitely, I'm not going to say a missed opportunity. Right? But I'm going to say it's a missed opportunity. So, one entry confirmation that we did get after 9:30 was a 5-minute engulfing candle that printed here. But again, the reason I don't even want to say that this was a missed opportunity is because technically speaking, same thing on the 1 minute, we'll talk about that as well. Technically speaking, on the 5-minute time frame, this isn't a valid engulfing candle anyway. Right? Because price opened with a gap. This red candle opened as a gap on the 5-minute time frame. Right? So initially what I was looking for was on the 1 minute time frame. Price on the 1 minute time frame on the first initial push down to the bottom. It left us, oh, my chart updated, but now there's 2 gaps in the market. The market here at these highs, it left us with a gap at the top here, and it left us with a gap here. At the same time, it gave us a 1 minute engulfing candle. But again, even on the stream this morning, I was telling you guys, this is a very ugly engulfing candle. It's not even a valid engulfing candle, because the red candle that printed after the second initial green candle, it opened with a gap. However, we know that overall we had a gap at the top of the market. We had 2 of them. And we could look at the structure. We were anticipating for price today to give us a type 3 pattern. Right? And again, a type 3 pattern is when price consolidates throughout Asia and London session. And at the end of London going into New York session is when we get the break of structure below. Right? And then price gives us a retracement 50% of the zone of consolidation to then continue. And then noticing the fact that the gap and the engulfing candle is right on the 50% line, that's why I was anticipating a type 3 pattern. But instead, price gave us a type 2 pattern. And what's a type 2 pattern on a downtrend? Same thing. 15-minute time frame, you're going to see price consolidate throughout Asia and London session. Is going to give you a break or retest to then continue back down to the bottom. So we were just a little wrong with the analysis on US 30 today based on what we were looking for. But I just want to call this out. Again, I've only taken, I think, 7 or 8 trades this year that were above a 1 to 10 RR. If we would have taken this trade, it wouldn't have been my highest RR for the year, but it would have been very close. It would have been a 1 to 33 on US 30. So the market makers are fucking lucky that they didn't give me this entry, because I was about to get fucking paid today. This would have been my, and I said this morning too on the live session, this would have been my last trade for the year. If we would have entered this bitch, this would have been my last trade for the year. And I would have fucking called out. I would have called the boss. I would have called the market makers. Yo, I'm calling out. I'm not coming to work anymore. I'll be back in 2026. Right? So US 30, we still know we're in an uptrend. Right? We had a change of character, lower low, and then price gave us the inducement of the high again and gave us a change of character back to the higher high. So at this point, gonna be careful. Right? These shorts were beautiful. We're trading at a higher high. We know we're looking for a higher low. That's all this trade was. Higher high, you're looking for a higher low. That's it. You took the trade from the higher high. You took the short from the higher high going into the higher low. Beautiful trade today on US 30. Beautiful, beautiful trade. If you caught that today, congratulations. I'm jealous of you. I wish I would have taken that trade. That would have been very, very beautiful. But best believe that would have been my last trade of the year. I wouldn't have looked at the charts anymore. A 1 to 30 to finish the year. We started off the year like that. January, I think, what was it? January 28th or 31st maybe? Whenever that Friday was. That was the first, I think, 1 to 34 or something like that I took for the year. And it was on US 30 as well. USD CAD still trading higher high, higher low, higher high. Came back down into the 30-minute lows. We have 2 days of drop. Gonna wait it out. Very similar to the other pairs at this point on the 5-minute time frame. 5-minute, 1 minute is where I'll start looking for price to turn around. On the 5-minute, we have lower low, lower high, lower low. On the 1-minute, we have lower low, lower high, lower low, lower high, lower low. Change of character, higher high. And we will go to the 1 minute so you guys could just see it clear, because I know I could see it, but you guys need to be able to see it too. Right, we had lower low, lower high. Right, we're going to say this is lower low, lower high, lower low. Then price gave us a change of character, higher high, higher low. And then it gave us a higher high break of structure here. So technically right now for USD CAD, it does look good. The only thing I don't like about USD CAD right now is the placements of the EMAs. The fact that price is still respecting the 800 EMA on the 1-minute time frame and we haven't broken above it, this is still a low probability trade, right? And overall, again, we can still see the movements. If we go up to the 5-minute, once again, we are still trading lower low, lower high, lower low. So we want to be careful with USD CAD. USD ZAR, we had a day of rise yesterday. For today, price gave us a no net. Price just moved sideways today. Didn't finish on a push to the top side, didn't finish on a drop. If you notice, the opening candle for Tuesday and the closing candle for Tuesday that gave us the market open for Wednesday going into Thursday, it opened in the exact same place. That's a no net. Price just moving sideways and very similar to the other pairs, rejecting highs, lows, to the middle, back to the lows, back to the highs, back to the bottom, back to the highs, just moving sideways. So USD ZAR, there's nothing there for me right now. Gold is another pair for me personally that I'm not trading. Those are 2 trades in a row, 2 days where I missed an opportunity, right? Gold gave us a beautiful entry yesterday when the markets open, which again, realistically speaking, we wouldn't have been able to catch that due to the spreads of the market as soon as the markets open. And then today, price ended up giving us 2 days of drop. So we have 2 days of drop on gold. Now again, that 372, that 3rd day continuation that we could be expecting price to give us, right? We're on the 800 EMA. Price is respecting the 800 EMA. So we know that that downtrend push on the 3rd day is very low probability. So we'll have to be careful with that trade on gold. Fuck, my bad, I just turned on do not disturb on my phone for some fucking reason. For Bitcoin, we have, is it 8 p.m.? It is. Did it give us 2 days of drop? Let's see. Or did it finish on a no net? Well, we have to wait for that 30-minute candle. It could still be a no net. We're only 16 pips away from it, so I'll update this later today. But if price ends on a day of drop, if it doesn't go up a little bit more, then we could be expecting price to continue these downtrend pushes for Bitcoin. I was keeping a very close eye on Bitcoin today. It just was sideways movement the entire time. What's on the watch list? 372 counter on GC and UC. Right, we'll go over it now since we're almost done here. We'll go over it again one by one. I think I only had like 1 or 2 pairs on my watch list. I think EU, I don't even remember which one it was. We'll go over it now. And then oil still moving counter again. We were at a lower low territory, which is the 4-hour and the daily lows. We were at the lower lows, 30-minute time frame. We were at the lower lows, and we're pretty much just looking for a lower high to be set. So as soon as we get that lower high point on US oil, we will continue to look for those trades going back down to the bottom. We'll just have to be a little patient with it. So let's go back one by one. So Muhammad could, so I give Muhammad the watch list and everybody else too. So right now AU still moving sideways, so I'm cool off of that. AUD CAD still on sideways movement, so I'm cool off of that. Euro AUD is on my watch list. Right, this is one I'm gonna keep very close into the watch list. We had the change of character, the break again, that candle. We had a very strong wick on the 5-minute time frame, so technically speaking, we don't have a valid break just yet. But EuroCAD, will keep an eye on it. Again, EuroCAD is still one that we're looking for a 3rd week push. If price gives us that confirmation of the break on the 5-minute, We still have Thursday session to trade going back to the top side, and then we have Friday session to trade on the top side. And when we're looking at ADR, right, 140, 140, that's 280, and we're missing 222 pips back to the top side. So we definitely have enough pips this week to be able to catch that trade back to the top side, but we have to wait for the confirmation. So EA is definitely on my watch list. Right, let me go ahead and start turning off. I'm not going to turn those off yet. ECAD is not on my watch list. EU is one on my watch list. Again, aggressively on the 30-minute time frame. If price could give us a valid break of these highs before it goes down, then we know once we get that valid break, we could be expecting price to continue back to the top side. So EU is one on my watch list. GA currently is not on my watch list. We're still making lower lows and lower highs, but we'll see what price does in the morning. It's not on my watch list, but we'll keep an eye on it. GCAD, I'm not interested in it. GJ, again, could be still a good one. We have a lot of room left. If price decides to give us a valid break of these highs, again, after the change of character, and when it gives us a valid break, then it could be a potential trade going into the NYC session. End of London going into the NYC session. For GU, very similar. 3 days of drop. Could be expecting price to give us a sideways movement or push to the top side, but we could still see price giving us lower lows and lower highs. NZD USD is moving counter trend. US 30 would be a good pair to keep an eye on as well to continue these pushes down to the bottom. We could already see that the 30-minute time frame gave us an engulfing candle, but it's too early to take trades on US 30. I wouldn't do that. Myself, I wouldn't take a trade on US 30 at this time. USD CAD could be a good one to continue to look for. The 1 minute, 5 minute, we could get those change of characters, break of structures to the top side. USD ZAR moves similarly to USD CAD, so if I'm looking at CAD, I'll be looking at ZAR as well. And that's it. Gold, Bitcoin, and oil, I'm not really trading right now, so we'll see what tomorrow morning looks like. But any questions, guys, let me know. I will be up tonight trading London session, so we will be live again on YouTube tonight. I'll let you guys know in the Discord when I'm live again. That's pretty much it. I was gonna go out tonight, but fuck that. Not going nowhere. But any other questions, guys? Any other pairs you guys want me to go over? Anything else you guys want me to explain? Anything else? Anything else, man? Let me know. And again, for the people watching the recording, feel free to message me. Feel free to leave the questions in the comments section. We'll get back into it. I'll be up. I'll just hop on COD when I get home, so I stay up. Alright, but you getting sick, man? Nah. The weather has been changing here. I got my allergies are going crazy now. As soon as the sun went down, my nose just started getting stuffy. And mad itchy. That's why I'm scratching my nose a lot. Third time this year, nah. I'm not getting. When I'm getting sick, I know I'm getting sick. Nah, this is just allergies. I just gotta wash my face real quick and I'll be good. Third time this year, nah. I don't get sick 3 times. I mean, I don't want to knock on wood. I don't want to jinx myself. I'm gonna knock on wood. But usually I get sick at the end of the year. My pattern of me getting sick is November through New Year's, right? And then, which is again usually when I get sick, just based on the weather, because that's when it gets cold over here. And then I'll get sick April, May, June, and then I'll get sick again at the end of the year, towards the end of the year. So could I be getting sick? Yo, maybe, but I fucking hope not, because I was just sick a couple months ago. But I don't think I'll be getting sick. At least for now. I don't feel sick. I'm not tired. I'm not coughing. My nose is just mad itchy. Usually that's just my allergies. But we gotta stop putting that word out there. Yo, you getting sick? Don't ask me that question, man. You're gonna fucking jinx me. And when I get sick as fuck. I don't like it. So I'm just letting you know, if I get sick, Kendall, and I die, I'm writing a note and I'm saying that you're the reason I died. So you better be fucking ready. Just letting you know. Alright, Muhammad, you said you're all good? Perfect. Mikey, you still in here? Any questions? Aura, any questions? I know you were in here in the beginning of the stream on Twitch. I don't know if you're still with us. But either way, thank you for the comments and for, you know, answering the questions that we had in the beginning of the stream. Always makes it a lot more fun. Give everybody another minute on the chats. 30 seconds. We'll give everybody 30 seconds in the chat. At the 21-minute mark on stream, an hour 21, we'll give it up. And then we'll be back again for the live trading session. No problem, brother. Thank you for explanation. Of course, my brother. No problem. Anytime, man. I enjoy this shit. I really do. As stressful as it is, and I know sometimes you hear me getting amped up when I speak, I'm just very passionate about trading. I love this shit. There's nothing like it. As boring as it is, there's nothing like trading. Yeah, I'll be doing London session. I'm gonna get back on COD here in the next 10 minutes. Up until like 11 p.m., 12 a.m., and then I'll be on the charts. Or if, you know, if we see moves earlier, starting at 10 or something, I'll get back on the charts, but we'll see. EU and EA looks interesting. Yeah, those are two pairs I'm gonna keep a very close eye on. You know, we could already see EU is pushing down like crazy, so we'll see what Price wants to do. Right, EA is following suit as well, assuming GU is doing the same. Right, so then we could assume that GJ is doing the opposite. Yeah, that's usually what happens. So we already know, using the confluences of the other pairs, right? If EU GU are going down, we know GJ gold are pushing up. If EU GU are going down, we know US 30 is going down. So, you know, it'll be the same thing for Bitcoin, right? Bitcoin has 2 days of drop. If it doesn't give us a no net, you know, we could at least take a trade going down on Bitcoin as well. If US 30 goes down, Bitcoin goes down. So, using the confluences for different pairs give you a upper hand, right? If US 30 goes down, USD CAD and USD ZAR go up. And again, based on where we're at, everything that we just said, even using the confluences for the other pairs, we could already give ourselves an upper hand in knowing, like, okay, this is most likely the move that's going to happen. So we have a few pairs for tomorrow. There should be a few pairs. We should at least be able to catch one tomorrow if everything continues the way that it is now. But how's GJ? GJ is good. But again, for GJ, I'm looking, before I take a trade on GJ, I want to see price give us a valid break of these highs. I'm not going to enter the trade beforehand. You know, could price give us an entry confirmation on another time frame? Yeah, like if we get a engulfing candle on the 15 or the 5-minute, you know, could we go down to the 5-minute? Like let's look at GJ again on the 5-minute real quick. GJ on the 5-minute, we had higher high, higher low, higher high, higher low, higher high. Now, technically speaking, on the 5-minute time frame, we're pretty much trading higher high, higher low, higher high, higher low, higher high, and then price never broke these lows, price never broke these highs. So technically, this is the higher low on the 5-minute time frame. On the 1-minute, we're trading lower low, lower high, lower low, lower high, lower low, higher high. Never broke these highs, broke these highs over here, higher low, higher high. You know, we could get a little aggressive and say that we're trading higher high, higher high, lower low, change of character, lower high, break of structure, lower low, lower high, lower low, lower high, lower low. And then price gave us a change of character, higher high, higher low, higher high, higher low. Right, so technically this is already where the change of character, break of structure, retest, and this is the continuation that we could see here. Right, so technically on the 1-minute time frame, price already gave us the entry towards the end of the session of NYC and the opening of this trading session for Asia. and then price gave us a engulfing candle here, but price didn't give us a wick on that green candle, so this wasn't a valid engulfing candle, but price tapped into it regardless. Tapped into it, didn't hit stop loss, and then went straight into profit on the top side. So we'll see if GJ gives us something. Again, the safest trade is gonna be once price breaks above these highs over here. So that's what I'll be waiting for. Yeah, on the 30-minute time frame. Yerp. Let me move Mackie, see if he's here. Yo, let me spit something real quick with that beat. I be fucking that bitch. Fucking the bitch. She creaming on dick. Creaming on dick. She creaming on dick. Yeah. That's it. That's all I got. The Lil Uzi flow right there. Alright, let me turn the stream off. Hold on. I'll be right back again. Alright, guys. Oh, shit. I still hear that shit on my mic. How the hell do I turn this shit off? Oh, there you go. Alright, guys. Any other questions? He said, LMAO. Oh, shit. Nah, but that's one thing. I wish I knew how to freestyle like that. I started bumping into like Juice World videos on my For You page on TikTok. That's fucking insane. How motherfuckers could just do that shit off top of their dome. Like, it takes me a minute. I'll have to listen to the beat first, right? Like, the thought process behind it is crazy. The fact that this motherfucker could hop on any beat, just like Jay-Z. Jay-Z's another one that I fucking don't understand. They could hop on any beat, and not only do you need to think about words in the spot, right? Sometimes you have some material that you want to use, whatever. But for the most part, in even to do that and be able to rap with the beat, like keep the flow that is with the beat, is crazy. So it takes me a minute. I'll have to listen to the beat for like 30 seconds, 45 seconds, say what I want to say in my head first, and then start. But then it's like, once you start, you gotta keep going. What the fuck am I gonna say? I might slip up, say some crazy shit, like, just because I got nothing to think about. I don't know. So that's one thing I wish I would have been good at. I'm not good at it at all, but I think I'll be good at it. My ego tells me that I could be good at it. I'll be on some fucking Tyler the Creator vibes if I start freestyling. Some fucking fruity stuff. That's just how it is. That shit comes naturally, though. Anything else, like a serious one, there's no way. That shit's so difficult to me still. And then, like, the beat flow switches, and then you gotta switch, and then you gotta still remember what it is that you want to say. Nah, that shit's crazy. Alright, guys, I think that's it, right? So, hope you guys have a good rest of your night. We'll be back again later for the end of Asia session, going into London session. Hope you guys have a good evening. We'll see you guys later. Peace out. Any questions, just let me know, guys. Alright, let me turn off the YouTube stream. I'm still streaming on Twitch. We'll play some ranked, play some wagers.